Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar, an indecisive spinning top on Friday, right at the top of the more recent market, with the highest highs since mid-January. Two things to note from this move. Firstly, the 50% Fibonacci line for 2023 at 108.64 is so far a capping resistance, but only on a closing basis. Secondly, I have previously set out target X at 109.85. This was for the secondary hardest to reach target for the small, broken mid-January to late February bearish expanding wedge pattern. The high was at 109.80 on Friday, which is just about reaching the area of my target, so I'm calling it reached. Overhead we have the broken green highlighted lower bull channel line, currently at 109.76, of the October 2023 to late January 2024 bull channel. This also acted as an overhead capping action. Now I'm still wondering if the market will now trawl along the underside of this lower bull channel line. Meanwhile below, well, we have a fairly clear zone until the combination of the green highlighted very slowly declining short medium moving average, currently 108.69, the 50% Fibonacci line for 2023 at 108.64, and the mauve colored slowly rising medium moving average, currently 108.46, plus the gold colored very slow rising long moving average, currently 108.35. These last two have been the base for the drive higher from last week. Now so far today, not much, hanging around the 50% Fibonacci line at 109.44. Cable, aka sterling against the US dollar. A sixth bullish white soldier on Friday, with another highest high and high close not seen since July last year. It continues to be a continuation of the move higher from the bullish thrusting pattern seen 2 Fridays ago. This time, the market uses a base, the dark blue middle time, currently at 128.09, with a broken November to December 2023 shallow bullish shift pitchfork, as well as the previously mentioned general congestion, which is now support, formed between December 2023 to January 2024 from approximately a 126 area up to 127 3/4 area. This overall general congestion had been the key overhead cap, pressing down on any attempts higher. The market rallied up through the November 2020 low at 128.52, closing over it, and also rising through the bright red highlighted July 2021 to date downtrend, currently at 128.62, but importantly, not managing to close over it. This downtrend is still the one to watch. Now so far today, an open on the downtrend, but seemingly failing to make any headway higher through this resistance right now. Euro sterling, a bearish closing long black Mariposa and second bearish black crow on Friday, halting shy of the support of the bright red neckline of the May to August 2022 head and shoulders continuation pattern, currently at 84.98. It was also a first close back below the dark blue middle time, currently 85.20, of the November to December 2023 bearish shift pitchfork. It was also a significant breach below the broken, small, purple highlighted, gently rising late January 2024 to date expanding wedge pattern, currently 85.24 to 86.04. Now further overhead, we have the combined December 2022 and 2023 lows at 85.45 and 85.47 respectively. Then the declining short medium moving average, currently 85.68, and the recent congestion running up as far as about 85 3/4. whilst below the bright red neckline and its recent associated lows down at 84.96, we have a clear area until the April 2021 low at 84.70. Now, I'm not yet ready to place targets below for the break of the recent purple highlighted small expanding wedge pattern, but I will be watching it very carefully for any commitment by the market. Now, so far today, a reactionary move back up, but only as far as the combination of the middle time and the lower purple highlighted trend line, and still supported by the bright red neckline below. US dollar against the Japanese yen. A second consecutive bearish opening black Mariposa and a fifth consecutive bearish black crow on Friday. This is all a continuation of the significant impact of the weekly key reversal down seen 2 weeks ago. Friday saw prices breach and close below both the rising short medium moving average, currently at 147.54, and a slowly declining medium moving average, currently 147.57. The fall was halted just ahead of the support below from the combined lesser Fibonacci line at 146.33 and a flatlining long moving average, currently at 146.27. Overall, prices are still within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, highlighted in purple on my daily chart. We are between the lower time below, currently at 143.88, and the middle time above, currently 157.96. We're also in between the middle time above, which is currently 152.01, and the lower time below, currently 144.73 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. So far today, well, a further attempt lower, but still holding shy of the lesser Fibonacci line and long moving average combination below. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross on Friday, but still with a long tail on it. Interestingly, both the open and the close were below the dark blue highlighted mid-January to date ascending triangle pattern, currently 720.40 to 723.55. This pattern is getting closer to its termination in early April, so it pays to pay special attention to it, especially if we have what seems to be a first significant close below it on Friday. The tail dipped down below the May 2020 high at 719.64 and the rising short medium moving average, currently 719.25, but failed to close below either. The top of Friday's range was capped not only by the lower dark blue trend line, but also by the declining medium moving average, currently 719.99. It was nevertheless a first significant close below the ascending triangle. Now, I'm not happy laying up potentials below, not just on the one close below, but I'm watching it closely. I can't help thinking that this has all been prompted by the unusual contrary weekly key reversals we saw in the Chinese yuan 3 weeks ago. We had a weekly key reversal up in the spot USD CNY, the onshore Chinese yuan, and at the same time we had a weekly key reversal down in the USD CNY, the onshore Chinese yuan again, but this time the 1 year NDF. Interestingly, this past week we have seen another fresh weekly key reversal down in the USD CNY, the onshore Chinese yuan, 1 year NDF, as well as a fresh weekly key reversal down in the USD CNY 1 month NDF. Now, so far today, another attempt lower, and we may end up with a possible second consecutive close below the ascending triangle and the short medium moving average. We have to wait and see. Support at the February low at 717.97, and then nothing much until the recent congestion between approximately 714 to 716 even. US dollar against the Mexican peso. A bearish black crow on Friday, effectively the seventh in a row. Prices were capped by the combination of the highlighted in dark blue middle time, currently at 1691.22 of the December 2023 to January 2024 mildly bearish shift pitchfork, as well, more importantly I suspect, as well by the support now turned resistance at 1688.97. The bearish pitchfork has accounted for in the past the best overhead resistance, with the upper time currently at 1724.53 and now the middle time. Now, going back a moment to the congestion at 1688.97. It was formed in mid-December 2015 and more recently featured in mid-August and late December last year, so it has some pedigree. Prices also punched down through and closed below the neckline of the February to April 2021 head and shoulders top, currently at 1681.46, as well as punching but not closing below the 2024 low at 1678.20, thus making a new low for 2024. Below we have some congestion between 1670 even to 1680 even from August last year, as well as the 2023 low at 1662.06. And overall, we are still well within the bearish shift pitchfork highlighted in dark blue on my daily chart. And so far today, a limited attempt lower, an even more limited attempt higher, and looking like an indecisive spinning top right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.